Good afternoon, and thank you, Chair Warren and Ranking Member Kennedy, for the opportunity to testify. I want to talk about the dangers of excessive concentration and the need for the banking agencies to swiftly update and apply their bank merger review frameworks. As you noted, President Biden issued an executive order in 2021 to promote competition in the economy. It encouraged the agencies to review their practices and adopt a plan no later than 180 days from the order, and yet here we are 2 years later, and the agencies have yet to publish new guidelines. We at AFR, Americans for Financial Reform, are deeply concerned about the concentrated power in banking and the wave of bank mergers and acquisitions that facilitated it. Bank consolidation has produced historically high concentration in the U.S. financial sector. The number of U.S. banks has plummeted from the 80s to today. And you've mentioned a number of stats here that sort of reinforce that point. The agency's history of rubber stamping bank mergers has come at a great cost, with marginalized and rural communities disproportionately affected. The Bank Merger Act and BHC Act require the agencies to consider convenience and the needs of the community. And yet bank mergers have reduced availability of credit, increased fees for basic banking services, and lowered interest rates offered to depositors. These adverse effects are even more pronounced in communities of color, low and medium income communities, where bank consolidation has led to significant branch closures. Bank mergers continue to drive large numbers of branch closures, and this disparately affects places where few branches existed in the first place, especially rural areas, especially low-income urban areas. Bank mergers' harmful effects also extend to small businesses, as we've talked about. Community banks have traditionally specialized in lending to local entrepreneurs and farmers. When banks consolidate, small business lending declines, as bigger banks tend to serve larger commercial customers. Bank mergers exacerbate systemic risk. Due to recent mergers, PNC, Truist, Capital One are now bigger than Washington Mutual, Countrywide, and Nat Citi when they failed in 2008. Financial crisis. Large bank mergers can exacerbate existing problems, such as the too big to fail dynamic, as well as related problems such as when banks become too big to manage. The American public would be better served by the agencies evaluating emergency sales, such as those that we saw, through a lens broader than just the least cost to the insurance fund, including resulting effects on financial stability, ability to manage the combined entity, anti-competitive impacts, and other negative economic consequences not beneficial to communities served in the economy. The least cost calculation criteria should also be more transparent. In terms of needed actions, those opposed would have us believe that we need deregulation to check concentration, pointing to failures to supervise SVB. We disagree. A supervisory failure does not indict all supervision. It argues for stronger regulation and effective supervision. Also, regulations promote competition, level playing fields, and oversee systemic risk. Oh, sorry, I apologize. I want to restate. Also, regulations to promote competition, level playing fields, and oversee systemic risk do not categorically squelch innovation and diversity of business models. They can, in fact, do the opposite. Among AFR's proposals, we have listed a few here and have more in my written testimony: pausing merger approvals until guidelines are strengthened, conducting a retrospective analysis on the impact of prior banking mergers, fulfilling the obligation to determine how a proposed merger will benefit the needs of the community with a robust community benefit agreement. This assessment should consider other relevant factors in addition to the bank's CRA rating, such as guaranteeing that a consumer merger is in the public interest by requiring CFPB approval, requiring disclosure of discussions between the institutions and regulators, and so on and so forth. To conclude, the above proposals are needed to protect the American public and combat the hands-off approach to merger reviews that has resulted in increased consolidation and inflicted substantial harm on the economy, small businesses, and communities, rural and Black, Indigenous, people of color communities. Thank you for allowing me to testify today. I greatly appreciate it.